We heard from Ursula von der Leyen today. We still know that the Europeans want a negotiated outcome. She's calling for a completely balanced deal between the EU and the United States. What does a completely balanced deal look like?
Well, I think the European Commission made it very clear that the best solution is to reduce all tariffs to zero. And I think that is what complete balance means. If we go 0-0, then we no longer have to debate around asymmetries of who's levying the higher tariffs.
And as you know, the Trump administration is really focused on this concept of non-tariff barriers, very abstract concept, could target VAT, food standard regulations, tech regulation, those sorts of things. Is it appropriate for that to be on the table in these discussions? Is it appropriate for DC to legislate Europe from there?
Well, certainly the allegation that the European VAT system in any way, shape or form distorts trade is wrong. That we will categorically push back on, because everyone pays the same VAT. That's the difference between a VAT and a tariff. So European companies pay VAT, US company pays a VAT, just like everyone in the United States pays a sales tax. So that is certainly something that we do not accept. What I do think offers room for negotiation, for example, the automotive industry has proposed standardization and homologization, i.e. that if you have license to operate a car in the United States, whether it's built by an American company or a European company or a Japanese company, it also has the right to operate in the European Union and vice versa. So if we build a car in Europe, it has a license there, it can drive in the United States, and that would increase the economies of scale for both of our automotive industries and be mutually beneficial. So those things are absolutely, from our view, possible and doable and should be debated.
And on the question of possible retaliation, it seems that the markets are pushing Trump towards a sort of softer stance. That, of course, could change. What do you see as the greatest points of leverage that Europeans have in order to retaliate against the United States?
Well, the Europeans have a market of 450 consumers of goods and services. I think we have to balance the debate, because while, yes, the European Union has a trade surplus on goods, the United States has a trade surplus on services. And net, the overshoot of one over the other is only about 3% of aggregate trade. So in that sense, we have to discuss both the goods side and the services side together.
And so specifically, what measures are you looking at in terms of targeting services?
Well, I mean, the Commission proposal for the steel and aluminum sector, I think, was very well balanced and took into account the products where we can substitute easily, and if there are tariffs by products from other regions of the world. But, you know, the Commission has suspended those for now to leave room for negotiations. So for now, we have to worry less about retaliation and more about what a good trade deal could look like.
And within the markets, we've seen a flight from U.S. haven assets, from U.S. Treasuries. You sort of preside over the other great haven, the Bund. Do you think that the Bund could replace the U.S. Treasury, or to a certain measure?
Well, I think the European Union now has a chance, and the Eurozone has a chance, to give stronger weight to the euro in global trade. For that, we would need an initiative from Europe to reach out to other regions of the world to speed up the conclusion of free trade agreements. For example, Mercosur is on the table, it's already signed. There's far-reaching negotiations already with Indonesia, with India, with Malaysia, with many regions of the world where there are negotiations. Those should be accelerated. We should start by lowering tariffs and then get into proper free trade agreements, and that would strengthen the role of the euro.
And on that point, we saw Pedro Sanchez speaking today in Beijing alongside Xi Jinping. Does all of this activity from the United States push Europe closer to China?
No, I don't think that has, I mean, we've been discussing the relationship and the strategy with respect to China for a long time. The fact is, the United States has just replaced China as Germany's big trade partner. Germany is now exporting more goods and services to the country we're in, namely Poland, than to China. So in that sense, the diversification of trade has already been going on for a while, and it's likely to continue because we are seeing that due to the Chinese strategy of China 2025, dual circulation, etc., it's getting harder and harder for German companies to follow the classic model of building in Germany and exporting to China.
And a final question on that. The euro opened yesterday at 109. We broke through 114 today. There's been a huge surging in the euro. That is going to make it also very difficult to prevent goods from China to come into the European market. What are you doing to prevent that? Do you need to erect more trade barriers against China?
Well, first of all, on the euro, of course, we're concerned about volatility in markets. So far, the markets are behaving in an orderly fashion. We've first seen a strengthening of the dollar relative to the euro over the past months, and now the euro is recovering and even going into positive territory relative to, for example, the time of the U.S. election. So in that sense, we're watching markets carefully, but we don't see anything disorderly or the markets are functioning very well. On the discussion on China, of course, you can take the example of the automotive sector, the battery electric vehicles, where the European Union has made decisions and is now negotiating with China. And one of the elements on the table, of course, is level playing field. And Europe rightly insists on a level playing field, and that has to be satisfied. And we cannot accept unlevel playing fields.